Welcome back, everyone. This is our gold market review for the 14th of September. Enjoy the report. The gold market remained in a sluggish sideways movement in the previous days, not really reacting to economic data or fundamentals. Yet the interest of the gold market is relentless, as one of the main characteristics of the instrument is its unpredictable nature, which is usually followed by a substantial movement in price action. During this week's report, we aim to review some major happenings that could possibly be of interest to gold traders. At the end, we will be closing with our gold technical analysis, providing important trend lines and interesting scenarios. We make a start with our observations on the relationship between the US dollar and gold's price. Even though the greenback has been rather active in the previous days, making considerable daily movements, gold's price has not mirrored the action. This may have been due to the fact that during the previous week, the economic calendar may have been rather light. In this case, we could say the greenback's correlation to gold remains questionable, and traders should be mindful of this reaction. In our opinion, gold traders could be saving up energy for the next days, as upcoming events or economic releases seem to be a motivator for greater volume. The gold market's attention could also be shifting to more material subjects than regular weekly or monthly economic releases. By this, we tend to refer to Federal Reserve's intentions whether to taper its QE program or not by the year's end. This is also the reason that the key policy meeting by the Federal Reserve on September the 21st to the 22nd may be of crucial importance to the markets. The gold market is expected to react very notably once traders get a note on when the Fed will start winding up its pandemic-era bond buying program. In the past week, Dallas Federal Reserve Bank President Robert Kaplan stated he would support a tapering starting in October, keeping all current economic and pandemic circumstances constant, however. Another important comment made by Kaplan is, in our opinion, that the employment market is much stronger than the unemployment rate suggests. We also tend to note that among the most positive indicators of the US economy remains the ability to create jobs and improve the unemployment rate on a consistent basis. This can also be contributing to the long-term downward trend that gold's price has been in for the past months. Overall, however, most important economic data, including inflation rates, have accelerated, adding up to improved economic circumstances and pointing out that some sort of change of the Fed's strategy to strengthen the economy can be coming up. From a different perspective, we may be observing some bullish tendencies for gold's price in the short term, as according to other comments made by President Kaplan, GDP growth rate in the third quarter could possibly be lower than expected due to some disturbances from the pandemic. Moving to our final part for the fundamentals report, in the following days, traders could be targeting a number of economic releases for placing orders in the gold market. On the 15th of September, we get the US industrial production rate for August, and on the next day, the 16th, we get the weekly initial jobless claims figure, the Philly Fed Business Index for September, and the retail sales rate for August. On the 17th of September, we get the preliminary University of Michigan sentiment for September. In the next week, a rather interesting day on the 21st of September, as we get the housing starts number for August, and the FOMC will commence its two-day meeting with the interest rate decision and accompanying press conference coming up on the 22nd of September. Moving now to our technical analysis, please note this is gold 4-hour chart. Very characteristic is the continuous sideways motion between the R1 1804.45 resistance and the S1 1780 support that started since the 7th of September and is highlighted with yellow on our chart. In a possible selling scenario, a breach below the S1 could send gold's price to the S2 1752.70 level, while in a more extended situation, a move to the S3 1732.60 is also possible. In the opposite direction, a possible run upwards can move the price action above the R1 and test the R2 1830 resistance, which is the highest price reached so far in September. In the scenario of a strong bullish momentum, a reach for the R3 1845.45 level is, in our opinion, the most probable action. The RSI indicator below our chart is currently running across the 40 level, implying some bearish tendencies may exist. Finally, due to the sideways motion carried out at the moment, we could say that a breach of either the R1 1804.45 resistance or the S1 1780 support could determine the further direction for gold's price. Thank you very much for your time and focus. We appreciate your participation, and if you like this video, please feel free to share and subscribe. From everyone here at IronFX, wishes for solid trading.